Hi, I'm Mark and welcome to Little Known Stocks, the show where I aim to prove that being boring and doing your research will make you money. Now today we're talking about MP Materials, a mining company which is quite unusual in the growth sector, but a really nice refreshing change and a piece of diversification for the portfolio potentially. So who are MP and why should you care about mining in 2021? Well, let's get into it. So it's worth noting that this is not a new mine. This mine was first opened in 1865, so it's a really old mine in fact. Now the current ownership basically have taken over and bought an unused asset, and it closed down because the Chinese competitors were so cost effective that the American market basically couldn't compete, and that's why they're the only mine in the Western Hemisphere at the moment for these rare earth ores. Now in terms of what they're doing, they're basically driving massive efficiency in their mines, and they're trying to be cost competitive, and they are being cost competitive with China, which is a really good thing to see for a US company, and very rare indeed. Now, as well as being an efficient mine, they're also able to be profitable because the materials that once weren't so sought after are really now very sought after. So if you look at some of the rare earth ores, they do basically extract all of these in one bunch. The rocks contain all of them, and we'll come on to that they need to sort them later on in the process. But so a lot of these are used for EV motors, medical devices, lasers. These two here are the main ones, so Neodymium and Praseodymium. Absolutely butchered that, but never mind. Those are the ones which are the highest grade magnets that you can buy. So if you're a high grade electric vehicle producer, you'll be needing these ores. So EV motors, big one and massive growth industry. Mobile devices, obviously massive growth in industry. And then wind turbines and other things that are using magnets basically. So anything that requires magnets, these ores will be going into, particularly the high-end devices. So one of the big things about MP is their environmental standards as well. So the mines in China are known for leaching, having very poor environmental standards, dust, leaching into the water, etc. They have agreed to the Californian environmental standards, so they're operating to a very high standard. They've got ore which isn't radioactive, unlike much of their competitors, particularly the Australian ores are radioactive. And then they are zero emissions, so that's really positive as well. Plus their supply chain further down the line, they're obviously supporting electric vehicles, wind turbines, etc., which is a massive progression in environmental standards. So let's look at the actual stock. So they're just sitting just below 5 billion market cap. They launched in June as a SPAC at $10 a share. They then very quickly ran up to around $45, slightly over, and they've pulled right back down to about $27, $28. They've been hovering around 30 for a while now. So if we look at the analysts, so first thing of note is 5 analysts covering this stock, and really that's quite unusual for a SPAC that only launched last year. So not many of the other SPACs have any analysts actually. Some have 1 or 2. 5 is quite significant, meaning that Wall Street really does value this stock. If we take the high estimate though of 53 cents a share this year, we have a price to earnings ratio of around 55, which is really very expensive still. Although obviously you're paying for a high growth stock here, and a lot of the other comparable stocks aren't even making a profit. So that's good to see, and hopefully they continue to improve that. Looking at some of their plans, I think they will increase their profitability significantly over the next couple of years, but we'll get into that later on. Finally, if you look at the analyst price target here, an average of 42.40, the high being 50, the low being 37, so all well above where we are now, which is really good. There's 3 buys and a hold, but it is worth noting that Deutsche Bank have downgraded, so most of these are new. There's a maintain, but there's also a downgrade, which could be a concerning sign. So MP Materials has been on a big sell-off recently. You can see at their peak they did reach a price of 49.44. Currently they're sitting mid 27s as of time of recording. And there were 2 real reasons why this happened. 2 press releases on the same day, on the 23rd of March. You can see on the 23rd of March we dropped from 45.99 down to somewhere in the 33s very, very quickly. So the two pieces, the first piece of news was a secondary public offering by selling stockholders. Now, this is not the same as insider selling, although it is equivalent. It's a consensus across a number of insider holders that they will sell their stock. So it's worth noting this doesn't dilute the shares at all. The same number of shares that exist, they're selling 6 million shares. It's just that it gives a sign of weakness if the insiders suddenly want to sell their shares. Now, this was March 23rd, 8 months or so after the initial IPO. So if we look at the initial IPO, I'll just go to the larger chart here. We started at $10. So the IPO was $10, okay? On the 23rd of March, as I said, we reached a price of $45.99 or thereabouts anyway. So we've 4.5x'd our stock in 8 months. If you were an insider who had just got $10 for your shares or had been given new shares at $10, certainly the opportunity to sell them 4.5 times greater in only 8 or 9 months is a massive opportunity, and I certainly don't begrudge them that. So the second thing that sent this falling was MP Materials announces pricing of $600 million of green convertible senior notes offerings. Now, if you don't know what senior notes offerings are, or bonds, they're essentially a promise to, at a certain date, pay back the loan amount, which in this case is around $600 million, or the person that gave you the loan has the option to buy shares at a certain price. So key details are the notes will mature on April the 1st, 2026. So by that point, you basically either need to pay back the money or buy for the agreed price. And the agreed price was $44.28 per share. So this deal was announced on March the 23rd, 2021. And if you look back at where we were on March the 23rd, you can see that we were near the peak at $45.99. Now, if you've invested in this company and you're holding shares at around $45, and you see that in 5 years' time a company can buy share options at $44, obviously that doesn't give you a lot of confidence that the return is going to be there. So if you're thinking, okay, I've just bought shares at $45, in 2026 this company's given me an indication it might be worth around $45, then obviously that's risky. Equally, there's a risk that it might dilute the shares. Now, in terms of based on that valuation and the target price further down that they were looking at, the full exercisable price, I worked it around to be roughly 15 million shares that were being offered. In terms of the total shares outstanding, currently we're at 171 million, so it works at roughly 7 or 8% of the total shares outstanding if they were to purchase all options, which isn't massive. Certainly for a company of this size, you expect them to be raising capital, and this is a very common way to do it. The only risk is if they continue to do this over the many years, between now and 2026, they may do this multiple times and we may end up seeing shares diluted significantly. But they are profitable, they do have a good balance sheet, so hopefully they can start to use their own capital going forward rather than relying on these types of offerings. And then if we look at where we are today, sitting at a price of just over $27, if in 2026 the share price is worth $44, then I've gained 60% on my position. So it's a totally different scenario than it was back in March when we were at $46 essentially. And really there's very limited downside to this news at this point if you're buying in at the current price. So MP did just release their first quarter results, and it's worth noting there are very strong results here, but also a lot of underlying risks and reasons why the results are so strong. So we need to look at it in more detail to understand. It's also worth noting the share price did fall. It went up and then fell back down again after the earnings. So certainly maybe some of the institutional investors didn't like what they heard. So revenue grew 189% year over year to 60 million. Net income increased 737% to 16.1 million. So they're profitable and they're growing their profitability massively, which is good. Always look for a profitable company if you can. Don't hang around with companies that make continuous losses. And then adjusted EBITDA grew 537% year over year to 33 million. So what's the catch? Why has the share price gone down? Well, not necessarily a massive catch, but really the one thing I wanted to highlight was this. So the rare earth oxide production volumes. So 9849 in Q1 2021 versus 9682 in Q1 2020. So why is it not increasing, and where is this increase in revenue coming from if not the mining capacity increasing? Well, it's coming from the price. So there's a lot of price action on these rare earth oxides. They're selling it for nearly $6,000 a ton versus $2,500 a ton last year. So massive increase there. When we look at the price of neodymium, which is the main ore that they're selling, we can see that it's massively spiked over the past 6 months even, massively spiked. And this is because it's used in so many of the products and sectors that are growing, which is why so many people are interested in the stock. People call it electric vehicles, but it's used in, not only batteries, but anything with a magnet. So the wind farms, headphones, microphones, cameras, anything really. So it's the requirement is growing, much like you hear about chip requirement growing. The requirement is growing, which is why the price is going up. But we shouldn't accept it blindly that the price is forever going to go up. And if we look at some forecast data, and again, this is forecast, so I'm really not an expert in this area. I don't know whether this is going to happen or not. It may continue to rise, but you see this banding, this level of error here. The price is expected to rise, definitely. But what you can see here is that we've pulled above the margin of error, which, much like stocks, suggests that there's going to be a pullback in the price. And so I think they've benefited from that heavily in Q1, but certainly it's dropped almost immediately, you can see. And the projection is out here. It's continuing to decline. So we shouldn't expect this growth quarter over quarter if it's all going to be driven by price of the ore. So when we think about mining rare earth ores, really it's China versus the world, and that's mentioned in almost all of the literature. So China currently have about 70% of the world's rare earth ores mining and refinement. If we think about the other projects outside of China, really they're key to certainly the US government, who see China as a really strategic threat. If there's any threat of supply for these critical resources from a country like China, then the US would be in trouble. In fact, the rest of the world would be in trouble. So they see it's really critical to have their own reliance, their own mines set up. So that's where MP comes in. If we look at their other competitors outside of China, we'll start with Lynas Rare Earths. So Lynas is the second largest producer outside of China of separated rare earth elements. So they're second to China, I should say. So why isn't MP, if MP are doing 15% of the world's global supply? Well, that's because MP at the moment are mining the resource, but they're not refining it. So that's a plan that they've got later on down the line that I'll speak to shortly. Lynas are currently doing that. If we look at Iluka, Australia again, they're not producing the same rare earth ores, so not necessarily a competitor, but potentially, they could be a competitor if that company looks to do that. You've then got Australian Strategic Materials, again, not much crossover, again in the Eastern Hemisphere, and Energy Fuels Utah, who are producing monazite sands, which again, MP don't produce. They also say that their ore is 8%, so every ton they mine, 8% is a rare earth ore, which they say compares to about 1 or 2% in their competitor mines. So although China might have lower cost of labour, etc., MP have to mine less tonnage in order to extract more ores, which is good. And if we do see that this price continues to rise, then there will be new entrants into the market. Now, this isn't something that you can set up overnight in a tent and just start digging. It will take years and years of investment, but certainly I'd expect to see China, other areas in the US set up and maybe even utilize existing materials and mines to get these rare earth ores. Finally, their production cost did increase 13% year on year, although it did decline quarter on quarter. They attribute this mainly to increased cost of materials and increased cost of logistics movements, particularly where they're going from China and moving that through potentially the Suez Canal, and all sorts of logistical nightmares have happened over the course of this year. So that's understandable. It's worth noting that I think that's probably giving them greater benefit than it is costing them. So we're seeing that filter through to the bottom line. So MP did report that they had more downtime this quarter than they have previously had, and they did still grow, which is good. But let's assume that engineering works don't improve things and they remain flat in terms of tonnage mined. Let's also assume that the price of the ore stays flat or declines slightly. So how else are they going to grow the bottom line? Well, they have a very clear three-stage plan, and I'll let you hear it in their words, but they've got a clear plan for how they're going to improve profitability going forward.
Nobody believed that we could compete against China, but we focused on execution, and we slowly, methodically, over time, rebuilt this. We have nearly 300 Americans proudly working on this site. When we acquired this site, we clearly realized that multi-billion-dollar supply chains don't move overnight. We had to have a long-term plan to restore this site successfully and sustainably. Our first stage, which is largely complete, was to relaunch the operations here. We now produce a rare earth concentrate product that represents 15% of the global supply. We are profitable doing so. Our next stage, which is underway, is to make separated rare earth products and optimize it to be a leader in global industry from a cost and sustainability perspective. Once stage 2 is done, we expect to generate a significant amount of free cash flow that will enable us to not just making separated rare earth products, but also magnets, so we can fulfill our mission of restoring the full rare earth supply chain to the United States of America.
Well, we know it's not a lost cause because we're doing it already. The steps that we've taken so far have proved that this company and this industry and this site can be successful. We're successfully competing against China now, and we're a low-cost producer in the world.
So as they said in the video, they're already cost efficient and they're one of the lowest producers in the world, but now they're going to refine and separate the ore and produce a higher quality product which they can then sell for more. So that's how they're growing their bottom line. But not only that, they're going to reduce their costs and potentially increase the revenue through selling to US customers as well, and I'll explain that. So at the moment they're selling to China. They're sending their product to China out of necessity because it needs to be refined there. If they don't have to send it to China, they obviously save on the costs of shipping there. They don't have to sell to Chinese customers. They're doing that now, one, because it's too expensive probably to bring it back, and secondly because they've got a pre-existing agreement. So they had a partial ownership, and they still do, from a company called Shangyi, who own a roughly 8%. They are partly Chinese government owned, so there's an agreement that they will distribute a large proportion of their product in China at the present time. With the necessity to send to China now gone, the ability to produce probably more cheaply at their own site in the US than could be done in China, and the ability to sell to whichever customers they want, I can see their bottom line and their top line growing significantly in stage 2. And as you can see, construction of stage 2 is well underway, so this is something that's going to happen relatively quickly. And when I say relatively quickly, I mean probably in the next year or so. To support some of the arguments I just made there, I want to play a quick snippet from the earnings call where they explain that they haven't put in place fixed price agreements to this date, and I think that's because they're waiting for an agreement with China to be released so that they can start selling to anyone in the world.
It cut out there, but I think you asked, do we have any offtake contracts for stage 2? Yeah. Have you had any discussion on that? We really do see what we have as being extremely strategic. to the downstream OEMs and frankly other industrial participants as the world electrifies. I've taken the view, and frankly, I think it's fair to say we got a little bit of, maybe criticism isn't the right word, but questioning last year about why we wouldn't sign offtake contracts. And what I've sort of consistently said is that I believe that we are headed into a game changer regime here. We have a very strategic asset, and the world wants what we've got. And so we want to make sure that whenever we do contract, that we are doing so in a way that we think maximizes value for all of us. And so if to the extent that we wanted to go out and sign a contract, I'm highly confident we could do so.
So as you can see there, MP very bullish on the fact that they've got a precious resource and they don't see many entrants into the market. They're not contracting at the moment because they believe that the resource is going to become more and more scarce, and therefore they'll get better value for it in future. So one of the last things I wanted to mention is that this is a highly political issue. I already mentioned that the US government fear an over-reliance on Chinese products. That's no different for the rare earth ores, and Joe Biden and Trump before him both have mentioned this, that they really want to be independent of China, particularly in rare earth ores. At the moment, the Chinese government do subsidize some of their mines, so there's a potential in the future that something like that may happen in the US, and that would greatly benefit MP. But there are a variety of other potential options that the government might help with. So that's MP Materials. In summary, I think they are quite expensive at the moment still, although they've seen obviously a massive reduction in the price recently. But I do think they are, strongly profitable, which is good, and they have a very, very bright future ahead of them. There is risk in terms of commodity pricing, but I don't see a big risk of new entrants into the market and supply dramatically increasing, but I do see demand dramatically increasing, and certainly MP are very bullish on the commodity price going forward. So I think it's a really good investment, and I think with the stage 2 implementation, we'll see profitability increase quite quickly, quite soon, which is very, very good news. So I'll certainly be building a position in this stock over the coming months, and hopefully we see some great quarterly earnings going forward. With that said, I would not be surprised if the next 2 quarters or so dip significantly as the commodity price comes back down in the short term. But we'll just have to wait and see. Please don't get scared out of the stock if that happens. I think this company have a very good long-term plan. As always, I'd love to hear your feedback. Please like and subscribe if you did like the video. If not, please leave me a comment below. I do check them, and I'll aim to improve on anything that I can. Have a good day.